I make too much money to contribute to a Roth IRA. Hey, I'm Kaleb Paddock, the founder of 10 Talents Financial Planning, and I want to share with you today the topic that came up in a recent conversation about a client who makes too much money to contribute directly to a Roth IRA. If you're a married couple filing jointly, this will be a little over $210,000. I know, good problem to have, but the first thing you want to check is, does your employer have a Roth 401k option? This would be the same Roth concept, but in a 401k, 403b, thrift savings plan, TSP. These are all retirement accounts at employers. And so you want to see, do you have Roth available in your employer plan? Notably, there is no income restriction for Roth in an employer plan. So that's great. You could be making $1 million a year, and there are no restrictions on the Roth in a 401k plan. There are in a Roth IRA, and if you've encountered this, that's likely what you're encountering, is the income limits for direct contributions to a Roth IRA. Now, ironically, if you're making $200,000, $300,000, $400,000 or more, you're likely paying an incredible amount of taxes. And so contributing in Roth may not be what you want to do, because you are going to look for pre-tax deductions. Obviously, everyone's situation is different, and there can be use cases in the $200,000 and $300,000 of annual income where you want to be doing Roth 401k. Absolutely. You just want to do a tax projection. Make sure your financial advisor has a copy of your tax return to understand the trade-offs. Or sometimes you can do a mix and match. Some of your contributions pre-tax, some of your contributions in Roth. But what I would encourage, and what I like to do with clients, is have us contribute the maximum to the employer plan and then strategize with how to do a two-step Roth contribution. You do have to zero out your IRA balances. So you'd want to work with a financial advisor to help you figure that out, move your IRAs into 401ks, or do Roth conversions from IRAs to Roth IRAs. But once you zero out your IRA balances, you can do two-step Roth contributions and be able to max out your 401ks while also contributing to Roth IRAs with the two-step mechanism. You do want to be careful though. You can really blow yourself up with this. So not advice, not something that you want to be doing on your own, because you can really mess yourself up significantly. I've seen it many times before, had to unwind a lot of these contributions because they were made incorrectly. So definitely an area that can add massive value with a professional, and you can see that and track that over time, that value. So if you're a high earner today, reach out to me if you have questions. I'd love to help with this. This is one of those ongoing value adds of saying every year, what should we be doing in the employer account? If you're self-employed, what should you be doing with the solo 401k if you have no employees? And if you have employees, definitely getting accountants, bookkeepers, office manager involved so that we can look at the 401k, whether you're employed or self-employed, and then as well the Roth IRA situation, which is a non-employer plan. I hope this was helpful today. And if you have additional questions, please reach out. I'd be happy to assist. Thank you so much. Bye-bye now.